Hi, good afternoon, everyone. Just a quick check. Can you hear me clearly? Is the volume all right? This is a new setup for me, so I'm afraid uh, there may be some discrepancies in the output of the sound and volume. So let me know if everything's fine. Uh, if you can hear me clearly, if it's too jarring or otherwise. Thank you. Yeah, all right, good to know. Let's start quickly. I will keep today short because I'm running late for something. I had to start the stream a little later today, so I beg your pardon. And thank you. Thank you for tuning in as always. You will be honored by your hard work that we put in. And you know that just dedicating yourself to a certain cause, to a certain purpose, and just putting in the work. It's all about putting in consistent work, and you will see results. When you see them, you will look back and realize that the results were already sown a long time ago, right? So we are not expecting overnight changes. Anything that you can see overnight change, as it suggests, can also change overnight detrimentally against you. So don't be someone that is looking for overnight change, because it can also change against you overnight, right? What you want to be doing is building a strong foundation. It takes time, right? It takes a lot of hard work, small wins, small work, putting it in diligently every single day, and it will never falter, right? So you have to focus on that, right? Come, let's take a look at Friday. I want to talk about specifically Friday here. All right, members in the Discord server, please click this end of day summary channel right here. All right, click on it, and let's refer to this 10th July. This is Friday. All right, if you want the full screen here, open it full view. All right, so click on this. Once again, under end of day summary here, you should see it hovering out 10th July right here. Right, so this is important. I want to be using this as a reference to talk a little bit about Friday. Right, so let's go. Let's take a look at this now. Friday is a very interesting day, right? There are several things, as you can see. If you already have reviewed this in the past hour, you will notice that there are several things I want to talk about, explain a little bit further, and I'll run through a little bit comment by comment as much as I can, so you can understand my thought process on the day of the trade. I took a couple of trades there that I felt were slightly advanced, and so I thought you may have an opportunity to learn something as well. So focus on learning something today, right? And as I always remind you, if you're on the trading floor, if you're in this space, if you're in this world here, right, this trading world, the day you think you know everything is the day that you will fail. Right, so come with a humble mind, right? Come with a humble heart, and always be learning something. Every single day, I'm still learning something about myself, about you, and from your experiences. And that's why studying other people's trades are very important, because another person may have already walked ahead of you or behind you, and you can absolutely learn from. Right, and this is what I always tell you, that when you serve someone, right, when you help someone, or when you read another person's experience, you walk that person's journey, you are literally hijacking that person's experience. You will learn a lot more than just from yourself. And so that's why serving others and helping others is an accelerated path of learning. You will hijack that person's experience, and you're gaining so much more experience than just doing it for yourself. Right, so that's very important. And when we come with a humble heart, we will absolutely learn something that will once again be contributive to your learning journey that you don't even realize it, right? It's always the small contributions that adds up. And so that's actually really important. You have to keep in mind. Now let's talk about Friday. It's quite a simple day. Now let's quick one. Just a quick one here. You notice this large red candle, right? So that's the highlight of the day, obviously. I will teach you how to catch this. Now, you don't necessarily have to catch this, but there are techniques for you to try. And how do you deal with your psychology if you don't catch it, right? So there are many approaches to this. Always treat the chart as just information. Now, information is neutral, right? It's not positive, it's not negative. It's how you deal with the information later that will be beneficial or detrimental to you. So this is important here. Now, I want to talk about this. Now, this, you have to first understand how this red candle originates. And that's at 9:54 right here, right? You firstly have to understand how did it come about. And after understanding how it came about, you will be able to learn how to plan to catch it, right? 9:54 right here, right? So 9:54 was here. This is 9:54 a.m., right? This is a live Discord comment here when the chart was like that. This was when we already identified the magenta algorithm, and I want you to see that. Do you see that? How beautiful they grab the liquidity right here. So first things first, you have to understand the main structure you're waiting for. But let's be frank, you probably can't catch it just with this information here. Right, because this was a large candle that broke through the magenta quite easily because the liquidity has already been built here. The key information from this, but right, as I mentioned, you have to first understand where this came from. Then, the next thing you have to think about and know is this pink algorithm right here. Now, this becomes crucial, this pink algorithm here, because you notice it's penny perfect right there. Right, so I will talk about this shortly, right? I will talk about this shortly here. But you see, firstly, you have to understand what the algorithms were trying to do, and that is there is some form of tapering here. Now, this tapering becomes very important, right? Because you notice there's liquidity here. If it wants to be grabbed, it certainly will. So understanding firstly, it's a tapering that's happening here between the orange and the magenta algorithm right there. Now this makes things very easy, because if you wanted to go long at this point, right? You saw orange that's building up. And I told you, right? If you wanted to go long here, you had to first wait for the breakout of the orange right there. And once magenta started showing, you had to wait for magenta and orange turning into some sort of support if this wants to head up. Now, the information here has already become a lot easier because of the blue buyer that started showing up. Now, this is an aggressive buyer. Not really aggressive, but he, she, whatever it is, right? It's an algorithm. It is identifiable. You know that if this wants to head up, this wants to buy. And I will show you another instance later. This instance, it has happened within this week, and I will tell you about it because I talked about it as well. But after Friday, right, I will come to this. Just let me put in a note. Let's talk about the green by appearing twice. Let me just keep it as a note so I don't forget that I talked about that. Now, so if you're here at this point, right? If you wanted to go long and there's no structure, you don't see the bullish control that's building up, right? There's no clear bullish control structure here, right? And how do you identify bullish control structure? Check the other trading videos, right? I have about, if I'm not mistaken, about 40. There has already been 40 episodes, 40 episodes of training videos. And so please do check them out. The links are all in the, if I'm not wrong, it's either in the trading question or it's a pinned comment. A fellow member has painstakingly collated the list. So thank you very much for doing that. But there are 40 videos so far, right? You can search on how to be looking out for control algorithms there. But if you know what I'm talking about, once again, here's another reminder. There is no bullish control, right? It's just grinding up in that algorithm right there. You have to wait for that breakout of that tapering algorithm, and especially when magenta has already started to show. So at this point here, this is important, right? Where I talked about this, you see I identified the pink as well, right? You saw the pink happening. Let me head back to the end of day. Yeah, this is what I want to talk about here. Now, this was at 10:06, right? And this was when we started chopping with inside candles. Now, technically speaking, you do not trade this. Absolutely not. Do not trade this. But you have to identify a very key zombie trade here. Now, once again, zombie, for those that are not informed, I talk about this all the time in training videos, right? It's the zone of mutual interest. It's the zone where both the bears and the bulls want to participate, and therefore you see liquidity building, you see the range chopping. It's quite ideal because it's a point where if you take a trade, both bulls and bears, it is more favorable for you. You may get a good trade in, right? Because directionally, when the chart's applying, it's either up or down, isn't it? But if you're able to understand that the bulls want, so a quick explanation, right? Going down, obviously the bears want it, right? The bears want it to go down, but sometimes the bulls want it to go down too, because they want to buy it at a cheaper price. So they allow the market to head down too before they buy it up. So when an instance like that happens, this is known as a zone of mutual interest. Both the bears and the bulls want it in that same direction. All right, you understand that? It's a very simple explanation, and I will show you an example here as well. Right, so I gave an example here, right, of the zombie up and down, and I talked about this on Thursday, just the day before, right, and I'll touch a little bit about that. Let's head to this again. Now, here, I talked about trending down here. So if you see, if you want to short this, right? If you want to short this, you want to have an algorithm that's trending down. Do you understand why? Right? You cannot be shorting this using the orange algorithm as your guide, even though this is tapering, even though this is a bearish control. So technically speaking, this is a bearish control because the bears are controlling this and it has tapered. So these are bearish controls. But you cannot be shorting it, even though you see the bears are trying to take control. Why? Because if you short this, say you short this here, this will kill you. This will kill you because it's trending up, it's decaying you, it's getting you out of the money. you are always going to be in some sort of drawdown, right? Unless your strategy is always to average in. And that's very poor strategy, to be honest. Unless you absolutely know how to integrate an averaging down strategy into your plan, which I would recommend most of you don't do that. But it's still viable, as I tell you. All information is neutral. It's just how you make use of the information. But most of you here who are watching this, you're probably a newer trader, probably intermediate, not an advanced trader yet. So you have to be very careful on not just introducing advanced concepts into your trading yet. What you need to do is to keep it as simple as possible. You understand that? Keep it as simple as possible. So you cannot be shorting when it's trending up. Makes sense? Because you are just fighting against the trend. If it doesn't work out right now, this is hindsight. You see that it went down. But on the trading day, what you see is the orange trending up. And if you shorted this, and if it truly didn't work out and it continued heading up to the orange, you're dead. You're dead. This particular contract that you have is going to decay. It's going to bore you alive. And you have no idea when to cut it. So you see, that's the other thing. You have no idea when to cut it. In this case, structurally speaking, where is your stop loss if you wanted to short this? If you're fighting against the trend, it's very difficult to introduce a stop loss. So keep that in mind. If you're fighting against the trend, if you fight against trend, right, it's difficult to place a stop loss. Understand that? Right, apologies for it's really difficult to write with this. But you understand what I'm trying to say. If you are fighting against the trend, you have very, very difficult targets for your stop loss. So what you need to be doing, and this is where the zombie comes in, what you want to be doing is when you see a line that's trending down. Now, I want you to see firstly, penny perfect pink. We identified this pink a long time ago. Right here, look, 10 o'clock. By the time this test that here, we already identified the pink. Right, this was 10 o'clock. This was at 10 o'clock in the morning. Right here, this was at 10 a.m. in the morning on Friday. This was when we already identified the pink algorithm. Can you see some semblance of the pink building liquidity? So when you can see pink liquidity that's building, you know that the bulls are building liquidity here. Now the question is, these are inside candles. If you want to get a trade in here, absolutely possible. I talked about this many times in previous trading videos. The possibility of doing this is what I call, right, you can search this, getting into position. There are a million ways to trade. If you're trading directionally, right, you're just placing a bet, hoping it goes up or goes down. That is too simplistic. It's so simplistic that it should not belong to the trading floor. That belongs in the casino. You see the difference? Because you're literally just choosing a side. That's betting. That's gambling. The trading floor, or what we're doing here, advanced day trading, is so much more complex than that. And there are so much more strategies or tactics that you can use for your favor, to your favor, right? You understand that now. So, what you can do, for example, right, is, firstly, if you follow the rules that I always tell you, when do you take calls? You take calls only as much as possible at supports, right? And you take puts as much as possible at resistances. Makes sense. So if you wanted to short this, you try to keep your shorts as near the resistance as possible. And if this is trending down, doesn't that help your puts as you have time to assess? And If you have penny perfect algorithms like that, can you set your stop loss target? Absolutely. If this heads out like that, if it breaks the pink, of course you give yourself some buffer, right? Because you notice, although the algorithms will be penny perfect, they do exist in a range, right? And I talked about that previously as well. That is just some sort of what did I call it? It's a scattered plot, right? So you have to understand statistically these are all scattered plots. So understanding that it can be in the range, right? So you have to still be slightly, I always say it's penny perfect, and yes it is to some extent, but you have to give yourself some breathing space, especially if you're trading, right? So that's the beauty of trying to manage your risks. And this is why I mentioned, if you are able to keep your stop loss to the penny almost, right, your risk to rewards will be exponentially increased, right? Because we're talking about a denominator and a numerator, right? You're talking about an increase in one extension of the equation, right? So anyway, this is trending down, right? And you're taking a put near to the top. This helps. What kind of structure are you trying to support in this case, in this particular trade? What kind of structure are you trying to support? These are inside candles. You don't trade this, right? You don't trade an inside candle. But you see that this pink is building liquidity for the bulls. And what is the structure that you may want to support? Take a look. What is the structure that I was trying to see of supporting? You see the possibility of an, can you see, inverse head and shoulder pattern? Do you see how I'm drawing the inverse head and shoulder pattern? So you're expecting that this liquidity here is the left shoulder, because it has built liquidity with the pink rhythm for the left shoulder right there. So you're expecting the head to form. Now, obviously, I wasn't expecting a head to form right at 5-day. And by the way, take a look at 5-day here. And don't you see? Penny perfect. You know exactly where the target is going, isn't it, at that point in time? And I will come to that, right? Because if you happen to catch this candle, luck or not, you have to be honest with yourself. If you caught it by luck, you have to know, and in your review, you have to break it down or deconstruct it on how you can get it with less luck. And if you didn't get it by luck, that's great. Just be honest with yourself and deconstruct it again, so you will learn how to do it again if it happens. But you see, clear target 5-day. And in your review, if you don't take your profits there, why? Is it greed? So you see, the less trades you take, the more quality reviews you can have per trade. So my suggestion to you is take less trades every day. If you take only one trade a day, you can spend so much time reviewing that trade, and it will be of great quality. So wait for the head to form, right? If you're a newer trader, fine, wait for the head to form, because you see the head formed and you still could get an absolute banger of nested inverse head and shoulder patterns, right? Or you caught the zombie here later. Well, I'll come to that. But otherwise, can you learn how to take zombies? Because I talked a lot about zombies in this week's reviews. So if you're expecting this to be the left shoulder, you see a trending down algorithm right here, in this case pink. You knew that the bulls will have to be building liquidity. Can you try to get into position and manage your risks and see if this is beneficial to you? And maybe you get lucky. Maybe you get lucky. You're just putting yourself in a position to get lucky. You understand what I'm trying to say, right? This is known as a zombie trade. I want to teach to some of you a little bit more advanced. For the newer traders, there are 40 other videos you can first watch. right? In the Discord server, please watch them training videos, like proper training videos like this that you're seeing now. So do watch them first, but I need to progress, right? And I'm bringing some of you along. We have to progress. So learn the zombies. Learn to take zombies, because zombie trade, getting in position of a zombie trade is probably one of the more lucrative ways you can be finding profits in the charts, right? So understand this, right? You know that there is inside candles, yeah? And inside candles, two things, right? The inside candle first, you have to be understanding that this could be that left shoulder right there. And secondly, even if it's inside candles, you know that it could be trending down. Can you take a zombie that you are anticipating that? Can you take a put by firstly managing your risk properly? Now, if this is trending down, can you manage your risk of a put even better? Absolutely, isn't it? Right? But of course, you have to practice this, right? Because you have to practice your risk management. Study the charts a little bit more. I have about 40 videos, and that's about a year or two worth of training videos like that. So you can also use the past charts, and you replay them, and you are able to see for yourself. And that's also one way of practicing, right? Using past charts and past analysis that I have already talked about. Now, once again, this is a news candle, right? So people trade the news. If you're trading the news, you are too late, right? You are not who this candle is intended for. Can you understand what I mean? So if you're trading the news, you tend to become liquidity. So avoid trading the news. I don't even have any news open when I trade the charts, because what matters is the candles. What matters is the charts. The news don't give you the money. The candles give you the money because it's the direct relation, right? So, So your profits comes from the contracts that you open, you buy and sell, which is directly affected by the price of the contracts and the charts. So don't create a too far off degree of association, right? It will come to the news. You're too late, right? You understand this. This is what you need to worry about, not this long stretch relationship right here, right? It's me trying to tell you that I'm related to someone famous, but the word related means I'm 7 degrees in relation. You know, it's absurd, right? And it doesn't make sense. So worry about the first degree, which is the price action, not the news. So understand this. And as I tell you, even the news have to respect the algorithms, because these people are placing orders in the market. And that's why you see even news candles respect the algorithms. Can you understand that? So this is the advantage that we have, if you understand, right? And when you can understand this becomes, you detach yourself from things that don't matter. Now, the problem with trading is people want to be more intelligent than they seem when they are trading when they're trading. And that's actually one of the worst things that can happen to you, because you search for information, you search for knowledge, and you create too much noise in your trading. You can never get good affirmation. You can never stack your skills. You can never practice, because you don't know what to undo. You don't know what to learn. And you are always in some form of limbo. And that's why many people never succeed, because they don't know how to stack up their learning. They don't know how to accumulate their learning. They don't know what to unlearn. They don't know what to learn. And so when that happens, it becomes a vicious cycle, because they start chasing the next shiny thing, which creates even more chaos in what they have already learned. And they probably don't know, once again, don't know what to learn, don't know what to unlearn. And then they chase the next shiny thing. And then they chase the next shiny thing. So what you need to be doing is to keep it simple, firstly. And secondly, you have to, very importantly, have the discernment to know how to stack up the skill. Stacking the skill is very important. You need, whatever you do in life, not just trading, you must be able to stack up your training, stack up your learning. Otherwise, you can never grow. So stacking up your learning requires your base to be much larger before you can stack it up, right? And you notice the largest component of what I'm always teaching you is risk management. If you do not master your risk management, you will find it very difficult to succeed. So it doesn't matter. It's not about what indicators you use. It's not about all the really unnecessary things in trading. The most important thing in trading that you need to learn immediately is risk management. And you notice, even though I talk about the algorithms, I always mention a few things. You always have to know your structure, which will define your stop loss target. You got to be able to protect the trade as soon as aggressively as possible, right? And take as little trades as possible so you can review them and they become quality trade reviews. All these will attribute to risk management. Very important, right? So anyway, let's get back to this. As I was saying, even news candles have to depend on the algorithms, because the algorithms are the machines that are placing orders in the stock market, in the exchange. And this is why they have to still respect the algorithms right there. So if you manage to catch this candle, right, you firstly understand that it's because there was a tapering between the orange and magenta that created some liquidity here for it to catch, right? But before that happened, this is usually too late for most of you, and that's fine. That's actually absolutely fine if it's too late. That's fine. I would teach you how to be catching more trades later, right? So let's talk about that shortly. And understanding that this could be a zombie trade, right? So I talked about zombie in today's video as well, right? So in this case, this is a zombie, right? Because if this is a bullish control, right? The bulls are trying to create liquidity to build this up, and they don't mind buying at a lower price to catch and stop hunt the bears for more liquidity and rebuild this beautiful nested inverse head and shoulder pattern on the way up, right? So you understand. So this is zombie because the bulls want it lower and the bears obviously want to sell. And that's why you have candles like that forming the head of the inverse head and shoulder patterns, as I was clearly telling you. So how do you capture the zombie? You first need to, in a risk management perspective, understand that you have to take puts at algorithms that are trending down, because they are to your benefit, right? You have clear stop loss because of that. Now, there are inside candles as well, right? So there are cases where this will head up, yeah, obviously, right? Because you may not need a strong head to form that. But it's not about being right and wrong trading. You must always remember that. It's not about being right and wrong. You will, in some instance, realize that even when you're wrong, you can make money. And in some instances, you realize even if you're right, you will lose money. So by that rationale, right and wrong doesn't matter. So you have to learn to find profits in the charts, that even if you're wrong, because you have strong risk management, you may even make money, or you will, have a small red that can be easily covered in your next trade. So you understand how to be doing that. Risk management, absolutely important. So a part of that risk management also means that your philosophy is that you do not covet, as I always use this word when I train you here, you do not covet what is not yours. So many times say that you took 50 contracts, right? And this 50 contracts, because you're trying to protect your risk, you have already protected maybe 30 contracts before this red candle came. So this red candle, you only benefited 20 contracts there. Now, a person who has that covetous heart, a person who is greedy will say, I could have made all 50 contracts here. You see the danger in that, right? Firstly, it's not your money. You didn't close that trade. So it's a fictitious number. The profits that you are telling yourself that you could have made is fictitious. It doesn't exist. It's not real. It's a figment of your imagination, of your fantasy. It's like you fantasizing now that you could make $1 billion. It's a fantasy. It doesn't exist. And what it only does is to poison your mind and your heart. This is what it says. This is what it means when you covet. When you covet something else, someone else even, it is bad. It is poisonous. It is sinful. It will destroy you eventually. You're just feeding poison in your heart and in your mind. You cannot do that. So you have to remove. And you see, people do that. Why do people do that? Because they are depending on luck when they trade. There is no system. And when there is no system, there is no proper way of calculation. And therefore, you don't have real numbers. You don't have real figures that you can be using as metrics to be stacking up your skills. You don't have real numbers. You don't have real metrics to be able to have a basis of comparison. So everything is a figment of imagination. Everything is arbitrary. Everything is made up. And that's why you can have fantasies when you trade, right? And that's the danger. And that's actually what the big boys want. The big boys want you to fantasize as much as possible, because it's you've seen casino brandings, right? You've seen how they market. They give you that opportunity is unlimited. They tell you all sorts of fantastical things. They try to create fantasy for you so that you fall into it. Let's not talk about casinos. Let's talk about YouTubers. They create fantasies for you to covet. Dangerous. Absolutely dangerous. So firstly, no hypotheticals like that, right? You have to first think that this is a very, very, very dangerous mindset to have, especially when you're trading. So for those who are always checking out historical prices, you're always looking out for how much you have lost or how much profits you could have made, know that is dangerous, because that's not the metric you should be basing on. You have other metrics you can base on, and that has to first come back to risk management, right? So once again, you have a stackable system where your metrics matter. How much profit you could have made, these metrics doesn't matter because it's fantasy, right? So you have to be more mindful about that. You must guard your heart and guard your mind. All right. So as I always tell you, purity of heart, clarity of mind. So you have to guard them. You have to guard it, right? So, okay. Inside candles, can you see the opportunity for inside candles now? Inside candles are a very good opportunity for zombies because it's not going anywhere, right? It has to break that imbalance up or down, right? So while I tell you not to trade inside candles, especially if you're a newer trader, if you're a newer trader, you observe inside candles until you are able to identify structure with the algorithms, and that's when you start getting into position, because you are very well primed to manage your risks with the algorithms, especially penny perfect algorithms. If you have something penny perfect, right, and now obviously penny perfect is a stretch term, right? It's just a figure of speech. It's not always penny perfect. Um, sometimes it's a little off, obviously, right? You see, this is a stock market, right? So it's just a figure of speech. But if you have penny perfect algorithms, now obviously you can manage your risks even better than just a gut feeling or instincts, or this is incredibly bad, right? Because let me show you a red candle here, and I can imagine a lot of people chasing this down, right? Because this red candle is bad news. This is bad news. And frankly speaking, there were not good news to bring us up, and that's why you see it's grinding up in a way. So I can tell you for a fact, and I know this from experience, once this red candle printed, people read the news and be like, firstly, they're late, right? Because this red candle already printed, and then they knew the news, which was a negative news, by the way, obviously, because it's a red candle, a large one, in fact. And then they started shorting this, right? It's probably happened to you before if you're a newer trader, right? Just chasing, because there's so many reasons to chase this, right? Yeah. And you know what some of them do? They allow the drawdown. They, instead of having penny perfect algorithms to guide them, you know what they do? They continue averaging down when this heads up, because they tell themselves this is a good opportunity to short. It just got cheaper to short. And how can anyone, now whoever you're watching, whoever you're learning from, if that person allows you to take a drawdown, now this is a 2.5 point drawdown, which in my standard is absolutely absurd. No one should be asking you to take more than 0.5 point drawdown on SPY. No one should be asking you to take more than that. But you have people who allow you to take drawdowns just because you are right in a certain direction. These people are gambling. They just want you to know it's either going up or down. But trading is so much more complex than that. So much more complex than a binary direction. This is incredibly bad, right? I can imagine, right? On that day, I even mentioned it, right? I mentioned it after the big red candle. What did I say? Anyway, you can search it later. I said that probably a lot of retailers were trapped here, isn't it? I mentioned exactly that. There were a few things that I mentioned here, right, that I want to talk about, and I will teach you that. But so far, so good. You understand a few key lessons that I want to teach you here. The first is that news candles still have to follow the algorithm, so keep it simple. Do not be too fixated on the news. Secondly, I talked about zombie, how to be getting into position of zombie trades. So there are a few techniques that I taught you there, right, and understanding this Friday candle, making sense of it. And you could make sense of it, isn't it, right? So more to come, right? There are a little bit more I will talk to you about. There are very key lessons here, and I will come to you in a while. Let me take a quick 3 minutes break. In the meantime, right, please leave a comment. Tell me if you learned something so far, right? Tell me what you've learned, obviously. That'll be important while I take a 3 minutes break. Yeah, I'll see you in a bit. That we have a lot more to cover, right? So that's the first part I want to talk about. Just a very simple inside candle zombie, isn't it? If you got lucky, that's great. And how to respond after this red candle here. So I will carry on with that. So just give me a couple of minutes. I'll be back. All right, I'm back. Now, where was I? Let's see. Yikes, give me a minute. I'm stuck on something. Let's see. Tabs, okay. Right, now 10:26 on Friday, right? You can see the timestamp right here, right? So once again, timestamp here, right? Timestamp right here, right here, right here. Take a look, 10:26 on Friday. All right, 10:26. That was just before it dumped here. 10:26 right here. Right here. 10:26 a.m. Just right before it dumped. I wanted an inverse head and shoulder pattern at 5-day moving average, right? So that was ideal, right? I'm no insider. The only thing I saw was this, right? As I showed you here. The only thing I saw, as I was teaching you earlier, was the pink building liquidity. So I knew the bulls were onto something. That's all I knew. I am no insider. I have no information other than this. So you don't have to be trading the news. If you trade the news every day, you will be so overwhelmed because everyone's trying to confuse you, right? Everyone is trying to confuse you. Obviously, or the talking heads or the news media, they're trying to confuse you, right? Everyone has their own agenda. They're telling you what they want you to hear, right? So you have to understand that if you're trading the news every day, you will be so stressed. Firstly, you don't know where to get your information from. Secondly, you don't know the timing of the information because you will have that confusion that you don't know whether that information is already priced in or not. Right? You heard that before, that the market has already priced in that information, blah, blah. You don't even know whether it's priced in or not. So you get confused, right? And you don't know the timing of the information. You don't know who's saying the right information. It's so stressful trading the news. So today, if you want to take away something, right, it is do not trade the news. Do not. It's stressful, so don't. Okay, anyway, right here, 10:26, right? Once again, 10:26, take a look for yourself, the timestamp, right? I wanted the inverse head and shoulder pattern because, right, this is to prove to you that I've looking at this pink algorithm. Firstly, you have to know the pink algorithm exists. You know that it's a bullish control. You know that it's the bulls trying to build that liquidity for the left shoulder. You got to know that, right? And then I repeated that again. I said I wanted the inverse head and shoulder pattern. 10:34, even I said I want the inverse head and shoulder pattern, right? And there is a very important key concept here. I want to talk about this, well. I explained this now. Remember, end of day summary, right, members? Right? You can look back a minute by minute analysis so it makes sense to you. I talked about this. I talked about this lack of clear liquidity of the 5-day moving average. Right? You have to understand that. Because, firstly, the 5-day is it's a very strong level, as you would know. Secondly, I also talked about if this wants to head down, you realize I didn't even chart the magenta. I didn't even do that. There's no need to because I don't see any liquidity here. This bounced off right immediately. Now, in your mind, right, in your trading mind, you must be able to think of all situations, right? Now, you cannot be doing something without covering all angles, no matter where you are, right? If you're in the military, if you're a sports person, if you are a consultant, if you are in any form of work, right? Or electrician even, or pilot, or musician even while playing in a band, no matter what role you're playing, you always must cover all angles. Driving, even if you're driving, you have to cover all angles. Nothing in life is just looking ahead and not thinking about anything else. That's very much so always an irresponsible behavior. So you must cover all angles. So even though I knew that maybe some form of bounce here, you must understand and cover your angles, and that's where some knowledge and some experience come in. Now, when you see all the green candles here, there are two explanations to this. Firstly is the lack of liquidity. The bears are just not interested. This is not a bearish move because they are just not interested. But there is a second explanation to this, that the bears are interested later on. What they're doing here is just to soak up the buyers from here, right? Because they know there are a lot of orders, and I have talked about this before as well in previous training videos. Not the first time you hear from me, especially all the older members that are with us. This is a key level. That's why you see it's penny perfect. There are many buy orders at this key level, right? Institutional buyers or retail buyers, whatever, they have placed orders at a very key level like the 5-day moving average. It's automated. So the sellers could be soaking up the buyers before they attempt another breakdown here after clearing the way. So it's a strategy to clear the way. You've seen it happen many times before as well, right? Now, does it always happen? No, but you're prepared. So with that information, you know, if this wants to head down, if it does truly head down like that, you're ready to short this without much structure. Once it gets to 5-day, you know that it has cleared the way. I would be ready to short this if it clears to 5 days. So this is where, right after you miss this large red candle, the next thing you got to tell yourself is, if this wants to head down further, you set alerts at 5-day and you are ready. Can you understand that? Right? I talked about this as well. I talked about this. Yeah. Right? I talked about this. Right, so study this later, right? If this was meant to soak up buyers, you will miss it once we break the 5-day again. Right? So you don't short it anymore until we get to 5-day. Until you get to 5-day and you see a stronger algorithm showing up. Alright, so you understand how to be creating setups for yourself. So if you're learning from me, eventually I would love that you are able to conceptualize and plan a setup for yourself. As I mentioned, all you need is one trade a day, and that's why I'm posting videos. Because when you can learn how to be looking out for your trades, all you got to do is to plan ahead for one trade a day. With the algorithms, it's very easy to plan ahead because you're able to see things very structurally from there, right? So that's why I annotate. When I annotate, you're able to understand that. So after this red candle, you do not chase. All right, at this point here, you already not chase this because I already told you there's no liquidity here. And I explained to you, if you wanted to chase this, if it breaks the 5-day, it will be an avalanche. And it didn't even get to 5 days, so you completely had no reason to short this. In fact, I took a zombie trade. I took a bounce from there because I wanted, as I told you on the day, I wanted an inverse head and shoulder pattern, and I've already saw it coming from a while, from a mile away. Because how? Why? Because I am able to plan my trade. I'm able to plan ahead. I'm able to see the pink liquidity, right? So I was ready for. Now, I wasn't ready that this was heading up. You see, psychologically, you need to understand what mindset must you bring to the trading table. If your mindset is always about catching the right moves, if your mindset is always catching the direction, you will never succeed. To me, my mindset when I got in the trade is to get into position. Now, it's very different. When I am getting into position compared to choosing a direction, do you notice how different it is? Some of you want to go long and just insist on going long. I am not like that. I want to get into position and see if the market is favorable for me or if I can extract more profits on the way up. And this is the only way in a live auction that you can find yourself more profitable than just choosing a direction. Remember, we are not gambling. I am not gambling. I am managing my risks and using that access in being able to manage my risk properly to take better positions to generate more returns. Right? So getting into position is very simple, right? You know, this is a zombie. I got into call here. And once I got into call here, I protected it immediately. And I saw that it is that strong buyer. Remember the blue here I talked about, right? If you were here half an hour ago, I talked about this blue. You see the blue still in control all the way up to almost 3 points. The blue was in control for 3 points. Why do I have to cut my calls? Especially when it's already protected. You see, this is called protecting your trade and then assessing once you are already completely stress-free. And this is why I could sustain my call. So once again, with that understanding of that mentality, are you choosing a direction? Or are you already getting into position and being able to assess how to be maximizing your profits? Very big difference, isn't it? And that's why I always remind you, don't worry about the direction. No. When you're trading, it's got nothing to do with up or down. It's got nothing to do with that. It's about finding profits. And the earlier you can see this, the earlier you will find success. All right? Understand that? So mentality-wise, you have to, most of you, especially if you're newer here, you're just watching me, this is the first time you're exposed to this, you need to change your mentality, right? And there's a reason why I'm doing this, because you need to scale up eventually. Now, if you cannot even manage your risk for one contract, how are you able to do it for 100? And that's the thing about trading. If you're not thinking of scaling up and reaching 100, you're not maximizing the potential of the stock market. The stock market made up of $66 trillion in market cap. I think it's more now. I think it's 70, 80 now, because we're always printing money. But you get the point, right? We obviously, we're not Elon Musk. We don't need to take $1 trillion or $2 trillion from the stock market. Elon Musk has successfully taken $1 trillion from the stock market. Well done. You and I, we don't have to be like that. But it doesn't mean that you're in the stock market just to make, what, $100? $200? You're in the wrong place if so, because there are other jobs that can make you that money with so much less commitment and requirement. Now, the fact that you want to do this it's testament that you are capable of thinking of how to scale up and how to, in for a lack of better words, think big. So you need to learn the right ways to scale up. Because if you, once again, I remind you, whatever strategy you're using, whoever you're following, my question to you is, can you scale up to 100 contracts, 500 contracts when you are using that strategy? I want you to backtest it. And like what I mentioned, if your drawdown is 3 points, your drawdown is 1 point, your 100 contracts cannot even survive. Absolutely no way. Then why are you doing this? Right? You're just going to blow your account every other day. So you need to know why you're doing this and plan your approach strategically. You got to know why you're doing this, right? All right. So that's very important. You have to establish that first before you properly commit and learn. And then you will stop worrying about small money. You worry about small money in your daily life. All right, you do that. You have to be frugal. I always tell you that. The secret to life is being frugal. That's the secret to life. You are stress-free. You don't worry about anything else. And you can focus all your resources on your purpose in life, right? I always talk about that. And for those that cannot do that right now, right? I know how you feel. I've came from there. You worry about surviving the day, surviving the night. That's all you worry about, and then keep it frugal. All right, but okay, that's for another day. Right, so understanding these two zombie traits here, right? So one zombie trait down, one zombie trait up. Enough. That's it. That's enough. You don't even need to catch both. If you caught one, that's it for the day. You've done enough for the day. Right, so absolutely beautiful trait there. And I want you to learn to see structure, because it may not be clear now, because I want you to see how beautiful the teal is, right? See, penny perfect teal. So even pink was not required to catch this liquidity. So what's happening right now? Let me just quickly explain this. The pink has built liquidity here for the right shoulder. This is known as your left shoulder liquidity, right? And on the way up, right, the bulls have caught the trade here. Now remember, I talked about this. Where did I talk about this? I said that, yeah, you have to first break the teal minimally. Was it here? I think a little further down. Yeah, I talked about you have to first break the teal. Was it here? Yeah, I can't remember where was it, but I talked about that. You see that it's teal in control, right? So minimally, you have to wait for teal to break. This zone is zombie. All right, so if you're taking zombie trades, this is where you take a zombie trade. But after which, this is where you have some confirmation that this may be going up, right? Because here you see the right shoulder that's slowly forming, and this is the possibility that you can see it's going up, because you see it's the same blue buyer that's in control, breaking a key bearish control here. So this is a possible entry. Then you saw the pink building more liquidity here, and you notice this could be a possible entry, but you have to protect it quickly. And then you notice this is a red flag for me too. You notice that it has started building liquidity. It has grabbed the pink. It's a red flag for me because this is not a clear structure. Now, when it is not a clear structure, it means that it's not definitive. If this structure were clearer, I would know that the blue would continue appearing, because you would know that the bulls are very resolute in wanting to create and capture the liquidity in order for that continuation to happen. But when this doesn't happen, you see what's happened next. It's still penny perfect, isn't it? The same magenta that we identified earlier just started grinding up all the way. This is not great. This is not a buying continuation. In my books, this is not great. This is something that you shouldn't be trading, because you become a sitting duck in the order books, right? Try to keep yourself out of the order books as much as possible, because you're a sitting duck if you're there, especially if you're trading 0 day to expiry options. So this is something I would absolutely not trade. And you notice, as I always tell you, you take profits as much as possible in the precision algorithms. In this case, I would consider orange after we break out here a precision. It's as good as that, but magenta not so. So even though technically speaking, right? So you see it's technical, but is it tradable? It's two different questions, right? Technically, it's a nice trade. You can see it happening, but realistically, it's a trade that you shouldn't be taking, right? So you have to understand the difference. So technically, you can see it's a buying continuation. So this is what happens with hindsight traders. Hindsight traders will tell you, hey, this looks great. This looks like it's heading up. So people who don't know will tell you, hey, this is heading up. It's nice. It's great. Why don't you take calls? But people who know, right, the rare ends of the bell curve, the normal distribution, the rare people will tell you this is not tradable. And they know, because these people know. Unless obviously you're protected runners, blah, blah. Okay, certain caveats apply. But generally speaking, this is not great. And it's only because you identify the magenta, you know that this is not great. But can this still be traded? Yes. And that's what's next I'm going to teach you. All right. So once again, give me a couple of minutes. I'm going to take a short break. Just fill up some water. Let me know in the comments if you're so far learning something. All right. And next is this magenta. I want to talk about this. Right. So give me a couple of minutes. Thank you very much. Give me a couple of minutes. Thanks. Okay, thank you. I'm back. If you study my trades, right? Everything's there. All my trades are there. I post them when I take them. I tend to get out of my trades literally within minutes, right? And then I leave a runner that's usually all runners. About 10% of my position runners that are usually inconsequential. Most times, it's very hard for a runner to be inconsequential. It's really hard, especially if we're trading 0 day to expiry. So as much as possible, I do very, very short bursts. I try to capture the profits as much as possible and just call it a day. Right? It doesn't matter, right? Because at the end of the day, where the charts go doesn't mean where you're going to make money. Because I've talked about this, it depends on your strike price, right? I could make, let me find an example, right? So say I took a call here, say I took a 756 call. Well, this is just for example, okay? So say I take a 756 call here, all right? And this 756 is here, as you can see, it's out of the money of the day. I could have made money here like that, right? This would probably have doubled, maybe it have. I don't know. I don't know. It's not a historical information. I have not checked it, but I know for sure that this will certainly have been increased its contract value for sure because of the volatility there. But imagine if I capped that. I would not have made a single cent. It would have expired worthless. So you see what I mean? It truly doesn't matter where the charts are going. It's not about where the charts are going. It's about extracting profits based on what you learn about the imbalances, right? So many people approach day trading very wrongly. They use investment philosophies for day trading, which is, well, I would say they're two completely different disciplines. So you got to know how to be, well, dissecting the necessities of day trading instead of using it's like people telling you direction is important for day trading. You can't say they're wrong. It's not wrong, but yet you realize it's not realistic. It's not the way to make money. So that's what I'm trying to say. Sometimes you got to know what you're doing, right? So anyway, this is just a very simple example, right? But you get the point. So now let's talk a little bit about Magenta. All right, let's talk about Magenta here. Now, at this point here, right, I talked about taking a debit spread here. Let's see. Where was it? Here you go. Oh, yeah. I talked about taking a debit spread here at 1106, right? So 1106 was about here. 1106 was, it was all on the way up here, right? So 1106 already here. It was already on the uptrend, right? Remember what I talked about? Remember I said that I wanted an inverse head and shoulder pattern, right? And then I said I'm taking a debit spread at 1106. And I said, what else did I say? I said wait for 5 day because, I don't give signals. But if you understood the rationale of what I'm trying to teach you, the concepts I'm trying to teach you, right? So on that date, so what I was trying to teach you was I was waiting for the inverse head and shoulder pattern. I said that wasn't liquidity at 5 days. So if you wanted to short this, you have to wait for 5 day retest again. And I said I'm taking a debit spread at 11:06 a.m. Right? So with all this information, did you think I'm taking a call debit spread or a put debit spread? Okay, you come to your own conclusions. That's the reason I don't say things like that, because I don't want to be giving signals. But if you can piece the information together, if you can understand my language, if you can understand the concepts, this becomes a piece of cake for you, right? So tell me, am I taking a call or a put debit spread? Okay, now let's talk about a little bit about spreads. Now, when you take a debit spread, for example, compared to credit spread, right? You could take a credit spread here too. Why not? Okay. Now, I could take a credit spread. That's not a bad thing. But my worry was that, remember I mentioned, I was worried that the sellers were trying to soak up the buyers here. So if this do break the 5 day, this will be extremely aggressive. If I were to take a credit spread here, I would be literally picking pennies in front of a bulldozer. That's not great, right? So therefore, I've already made quite good profits from this zombie trade here, from this bounce. And so I'm limiting my risks by taking a debit spread. When you take a debit spread, your risks is limited. It's literally the contract value. And if you are here long enough with me, I always take something called a dollar spread. When you take a dollar spread, the spread costs $1 for SPX, so it's 10 cents on SPY. It's $1 because that's the allowed stop loss that I have contract value wise. So I don't have to worry about this. And I always take 2 strikes apart so that my maximum profits will be $10, which is literally the price of 2 strikes. Okay, so now if you don't understand what I'm talking about at this moment, you can clip this and ask ChatGPT or Gemini to explain what I'm talking about, right? So this part where you're talking about credit debit spreads, 2 strikes, which is equal to $10 on SPX, right? They will make sense for you, right? So that's the beauty of AI right now, isn't it? Right? I will introduce that next time, together with the whatever's in the Discord servers. I'm working on that right now. But anyway, when you take a debit spread like that, you limit your risk. So I've already fixed my profits. let's say my profits for the day say were $4,000, right? And if I take maybe 10 contracts of this, right? I just limited my risk to another $1,000 if it doesn't work out, right? So you see, you're limiting your risk. But if I take a credit spread, it's actually really dangerous unless this credit spread is part of your larger strategy. So remember, the time frame we are looking at now on a day trade is a daily time. It's not daily time frame. We're looking at the scope of a day. But if you want to manage your risk beyond that, right, you want to bring this risk and inherit this risk to a larger time frame, say a weekly or monthly strategy, by all means, right? I will teach you that next time as well. But if you're just doing day trading purely, you need to understand that this has very significant risks unless you know exactly what you're doing. All right, so I would prefer, if you're day trading, as much as possible, more debit spreads. If you're willing to spread your risk to further time frames, then yes, you can do the credit spread. But that for another time. Okay, anyway. Now, I've taught you this before. With the algorithms, right? So, okay, let's just chart this from the bottom of this, right? Which was here, right? So, with the algorithms, you are able to see, let's see here, what strikes you are able to choose. So, say, magenta, right? Okay, let me just redraw that. Magenta, yeah. By 4 p.m. when market closes, right? What's the highest you can go with magenta? 756.5, right? What's the lowest? Let's just chart it right all the way from the bottom, right? The lowest you can go is 753. So if this wants to continue grind in magenta, right? And it's a very large range in this case. But you notice the range started shortening here, right? So here, I would have charted like that. So this would have been my magenta because I see that the chop has started forming. So I know by 4 p.m. the possibility that it will be at 755, thereabouts. So if you were to take a call, you choose a strike that's below 755, so you get in the money. And how are you able to register this information? With the algorithms. You understand now. This is known as your dominant algorithm. Right, you know that it may chop. You are able to chart the magenta and extend it, obviously, right? You extrapolate it, and you're able to tell, right, by the intersection that there is an estimated price that it may close if this magenta stays dominant. In this case, you do not take a strike that's above this if you're taking a call, because you're just you know that it's not going to get there. You understand this now. So when you're taking a debit spread like I did, you also plan your strike price accordingly, knowing that there is this dominant algorithm in place. You understand that now? Yeah, because it is very unlikely that this strong buyer, in this case the blue, continues sustain all the way like that. It's not realistic. Can you imagine this sustains all the way to 4 p.m.? We would be already at 900 SPY. That's not realistic. All right, so you see, once again, there is a certain realism in trading that you need to be able to structure your trade that way. All right. So understand that how to choose strikes, very important. Right. So why did I talk about debit spreads? Now you know, right? You limit your risks, right? Your profits are still incredible. If this truly went all the way in the money, it's still 10x, right? It's still beautiful, right? And it's very low cost. When you're taking debit spreads, it must be a write-off. So it must be done with prior profits. You have to understand that as much as possible, because chances of it. Chances of it not entering in the money is very high, because it's expensive. It's expensive at certain points, right? So you just have to be more mindful. Usually I'll take it after lunchtime or during lunchtime. because that's when the market will start to chop, and obviously the contracts will get slightly cheaper. Right, so this is the best time to take spreads, because in the day, intrinsic value is still high. Right, so I talked about this in, I think, in the trading videos 2 or 3 weeks ago. I mentioned that in the day, your intrinsic value is still very high. You're just making off the difference in your imbalances. Right, so it's not too big a deal. Now, end of day, it makes sense to just take puts and calls by itself, because it would have already be very affordable, very cheap, and you would have very clear ranges of a strike, because a lot of these strikes will already be out of the money, right? So the delta will be extremely low, and the delta will be compressed nearer to where it's at the money. So this is at the money, right? So your delta will be compressed near to at the money. So what you will see is that, for example, at the money contracts, you will see maybe 1 delta, 0.9, 0.8, right? And then thereafter it will drop off to 0.2, 0.1. It gets very compressed near to the center, because the market already knew what the range is like for the end of day, right? So you notice what's missing here will be the center. So at the middle of the day, this is where, right, you don't already have the intrinsic value advantage of the start of day, and you don't have yet the market closing down the range and giving you very cheap options to be playing with. So what you can consider doing, especially on the midday, is taking spreads. And that's why you notice, right? So this is the theory behind why you notice during midday, there often is a chop, especially after London close. So after London close, the market usually chops. You hear that all the time. Not all the time, maybe 80-90% of the time. And you understand why now, because in terms of option pricing, this is exactly why. All right. Yep. There you go. Let's a beautiful day, right? I want to talk about something else that I mentioned earlier, right? The double buying here. I think it was, no, it's not Thursday. I think it was Wednesday. This was a great trade as well, Wednesday. Right, so anyway, I talked about something earlier. Let's talk about Wednesday now. Quick one. Yeah. Right, now, this is not new to you, right? Because, once again, identifying the algorithms are very important. Now, this was Wednesday. Take a look at the timestamp now. Wednesday, 8 July, 11:59 a.m. Right, Wednesday, 8 July, 11:59. Now take a look at the charts. This is Wednesday, right? Can you see the timestamp here? This is Wednesday, 8 July. Right, you can see it below. You can see it below here, right? Wednesday, 8 July, 11:59 will be here. So I'm just going to annotate that, right, as a reference for you, right? Much earlier. This is 8 July, 11:59 a.m. Okay, now take a look at my analysis here. You see the green bar appearing, right? And I mentioned if this wants to head up, you will see the green bar appearing again. And there you have it. You see it for yourself happening right there. Right, so I talked about this earlier about that blue bar for Friday, remember? So Friday, that was that blue bar. And on Wednesday, it was this green bar right there. Beautiful, 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 beautiful. So as I told you, if you missed it, it doesn't matter, because it's a clue that you can use to piece together for the next trade, because you're always ready for the next trade. So you don't have to worry. Like some of you take hundreds of trades a day. I'm telling you, take one trade a day. You just have to be able to learn to see that one trade you want to take. And if it works out, great. If it doesn't, so be it. You wait for the next one trade you got to take. It's not just in trading, right? Even in life, right? You should be searching for quality, not just carpet bombing. That's a sign of desperation. That's a sign of neediness. That's a sign of you not knowing what you want. So I want you to learn to zoom into what you want, right? That process before you go and achieve and attain it, right? So the process of self-discovery, of knowing what you want, is so much more important than just carpet bombing anything you see. And right, so anyway, all right, I think I'm about done. Very interesting day on Friday. I just wanted to touch on that. The rest of the day was quite like Thursday, for example. Thursday was very similar to Friday. So if you did your review on Thursday after the end of day review, right? So if you did the end of day review on Thursday, Friday actually became very easy for you, because you notice it's almost very similar concepts that were being used, right? So when I explained to you on Friday, right, Thursday, you could go review again and you see it's actually quite similar. In fact, Thursday, that inverse head and shoulder pattern was so much more clearer, right? Thursday, well, it's the same thing, right? We talked about this. It's so much clearer. Do you see that inverse head and shoulder pattern with that pink algorithm? Absolutely beautiful. So much clearer. And because it's a clear structure, you see it broke out a little further, right? Before it started tapering off in the magenta. Once again, it's the same magenta. Magenta is our favorite algorithm right here, right? So you see, it had more mileage because it had a clearer structure, and this was so beautiful, isn't it? Can you see that nested right shoulder, right off, penny perfect 5-day moving average? This is one of the cleanest structures I've ever seen. It's clean, and it's beautiful. But alas, you don't have to catch all the trades, right? Because did I catch this? I don't remember, because there are times I'm done by 10:30, right? I probably caught the zombie here and I'm done for the day, right? So once again, do not covet, right? And when you are frugal, you have less reasons to covet. Because it's a form of training of your mind and of your brain. So while we're doing technical skills training here, I want to be training you together as we trade every day, as you hear from me, as you watch me trade every day. I want you to be trained mentally, spiritually, right? Also together. And emotionally, as one group here. That's why we influence each other positively. It's not just the skills. It's the same thing, right? If say you're looking for an attorney, right? You don't just look for a competent attorney. You're looking for an attorney with good character. You're looking for an attorney with good attributes. It's the same thing, right? It's not just about the skills. So don't just be trading and just be improving your skills. You're fighting the wrong battles, right? A big part of trading is obviously your intrinsic character, right? Your emotional maturity, and you need to build that. And that's why I always say that trading makes you a better person. It should be. It should. If trading makes you a better person, then you're learning trading right. Okay? It's as simple as that. If trading makes you greedy, if trading makes you more frivolous in your spending, if trading makes you buy useless things, if trading makes you spend frivolously, then you're learning it wrong. You're learning it wrong. If trading makes you want to scale up and take more risks in life, you're learning it wrong, right? So that I think you must return back to the heart of why you do this, right? So remember, if trading does not make you a better person, you are learning it wrong. And I think this is something, the beauty of trading is that there's an open and there's a close every day. So there's literally routine for you to do your review. There's literally routine for you to know there's a start and there's an end, so you know you can do your review. And that's where you create quality in the next day, right? Because you're able to work on it. Every day you're able to work on it. You have time to work on it. That's so important, having a routine like that, right? So yeah, thank you for tuning in. I'm really happy to be sharing with you. I'm really happy you're here, right? I'm grateful. I'm grateful. As I say, we are always learning from each other. I'm learning from you, every one of you, every single day because of what you share, right? And as I mentioned, it's not just about trading. I'm learning. True. I don't have to learn about trading from most of you, but this is not just about trading, isn't it? It's about life. The fact that you're journeying with me in life as well, not just trading. I'm learning about life with you, and it's been truly humbling. And all I can say is that I've learned a lot. And how do I know I'm learning a lot? It's my desire to want to do more. It's my desire to want to do better. That's how I know I'm learning a lot from you. So there are big plans ahead, right? Members who've been here for a while, there are big plans. That I'm planning it, and they are coming sooner than later, within the next week or two. I've survived once again another big scare for some reason, and every time I survive a big scare, there is a breakthrough, and that is how I know God is leading me. Right, so a breakthrough is coming. I know it is because I survived a scare. I know, right? I just do, because I spend a lot of my time seeking for His direction, and by God's grace, I am still here with you, and I see a purpose. I really do. I really do want you to succeed. I really do, and not just. So please remember that trading must make you a better person. That is success to me, right? It's not about the money that you make, right? The money comes naturally, because by virtue and by nature of trading, money is involved, right? But making money doesn't mean you're successful, because you may turn out to be a complete jerk because of the money. That isn't success to me. But if trading makes you a better person, trust me, the money will follow, and you are a good person. You succeeded, and you still get money. It's win-win, right? So it's the second half of the year. I have a commitment to you who have made a commitment to me to succeed in 2026. I wanted to say 2016. My goodness, still living in the past. 2026, right? I have a commitment to you who have made a commitment to me about 2026. So this next half a year, I'm going to sprint, right? As I told you, God allowed me to survive a scare, and that means that I have the ability to sprint now. And as you have heard, if you've been around, I intend to do live stream trading. Maybe I'm still testing it. So I'm always attempting, and as I told you, I'm humbled by what you teach me and by you, and that's why I'm willing to try new things. I'm willing to want to do whatever it takes for your success. So thank you once again for watching. We got this, right? So I'll see you tomorrow. Opening bell. Prepare you for the week ahead. All right, and for YouTube, as you can see, I'm not uploading daily videos as yet. Some of you will know I'm having troubles with the AI moderation. Well, there are some blatant gambling videos out there that it's completely unscathed, but here I am telling you not to gamble, and I get flagged. So I can't fully explain that. Some of you have given me tips and tricks, given me even some context on how to approach this with certain relevant personnel. I appreciate that, but I'm not that kind of person that YouTube to me is just a medium for me to post and upload things with good bandwidth. I don't covet more than that, so I'm not motivated to want to make right. It doesn't matter if they want to continue. The system is like that. Then I don't want to fight it. It's not a system I believe in, so I don't fight it. You realize, you understand what I mean, right? So if you're living life in your own terms, if you're living life transparent, above board, illuminated, and not being afraid, then why do I have to fight? That's what I believe in, right? So I will just continue doing what I do, and yeah, we'll see how it goes. I don't want to fight. I don't have to. If the system is not right, why don't you understand what I mean, right? We'll see how it goes, right? So anyway, thank you very much for watching. I truly appreciate it, and I'll see you opening bell tomorrow, right, members? So please continue to review, right, the end of day summary for the week, and I'll see you tomorrow. I will keep you posted on the preparation for tomorrow, right? So thank you very much. Right, see you later, right? Thank you.